The analysis of USDT dominance is paramount to understanding current and future liquidity flows within the entire cryptocurrency ecosystem. USDT dominance, or USDT, is not a measure of price stability, but rather a critical sentiment indicator that tracks the market capitalization of Tether relative to the total crypto market capitalization, excluding Bitcoin and Ethereum. When USDT dominance rises, it signifies that capital is moving out of volatile assets like Bitcoin and altcoins and being converted into the stable and less volatile Tether. This movement suggests a risk-off sentiment, where traders are parking their funds in a temporary safe harbor, either anticipating a market correction or simply waiting for better entry points. Conversely, a falling USDT dominance indicates a risk-on environment, with capital actively flowing back into Bitcoin and other cryptocurrencies, fueling potential rallies. The current chart structure of USDT shows it is testing a long-term descending trend line resistance, which if broken to the upside would be a strong bearish signal for the broader crypto market, likely leading to further price depreciation across the board. This resistance zone is situated around the 55 to 60% dominance mark, a level that has historically preceded major market sell-offs. Immediate support for USDT is found near the 45% level, which corresponds to a recent area of strong rejection, meaning a move back to this lower boundary could signal an impending significant relief rally in the crypto space. The daily candlestick analysis reveals indecision, with successive doji candles forming near the resistance, indicating a temporary equilibrium between the buyers and sellers of volatility. This suggests the market is holding its breath, awaiting a clear catalyst to dictate the next major move. A breakout above the resistance would necessitate a high-volume confirmation, signaling strong conviction from market participants to retreat from risk. The inverse correlation between USDT dominance and Bitcoin's price is a fundamental concept in technical analysis, and their movements should always be assessed in tandem. USDT's role as the primary liquidity pair across major centralized exchanges further cements its influence, with its daily trading volume frequently exceeding that of Bitcoin itself, confirming its status as the de facto settlement layer for the digital asset economy. Concerns surrounding regulatory scrutiny and the transparency of Tether's reserves continue to be an underlying systemic risk, which, if realized, could induce extreme short-term volatility and a flight of capital to other stablecoins like USDC or even back to fiat. However, Tether has consistently demonstrated resilience and market trust, evidenced by its rapidly growing market capitalization and unwavering 1-to-1 peg against US dollar throughout various market crises. We must also consider the recent increase in new USDT minting, which adds fresh liquidity to the market and historically has often been a precursor to an eventual upward price move in Bitcoin once that capital is deployed. Monitoring the flow of these newly minted tokens from the Tether treasury to major exchange wallets provides a forward-looking insight into potential market demand. A sustained decline in USDT dominance below the 40% mark would be a strong indicator of a full-fledged bull market commencement, while a move above 65% would confirm a deeper and prolonged bear market correction. Therefore, tracking the USDT dominance is not just an ancillary metric, but a primary tool for gauging the overall market risk appetite and predicting directional shifts in the BTC USDT pair and the wider altcoin market. My projection is that the USDT dominance will remain confined within its current consolidation range between 45% and 55% for the immediate short term, before a decisive break confirms the next significant market trend. The current Bitcoin price action suggests a critical inflection point in the near term, establishing a pattern of lower highs and relatively Flat lows on the hourly chart, indicating a consolidation phase after a significant volatility period. We observe that the immediate resistance level stands firmly around the 92,000 USDT mark, which represents a psychological barrier and a recent area of strong selling pressure. On the downside, immediate support is identified near the 90,500 USDT level, which has held firm during the latest sell-off attempts, signaling underlying buying interest at that specific price range. The moving average convergence divergence or MACD indicator is currently displaying a bearish crossover where the MACD line has dropped below the signal line, suggesting that the momentum is currently favoring the bears. However, the histogram bars are starting to shorten their negative length, which could be an early sign of a potential reversal or at least a slowdown in the selling intensity. The relative strength index for RSI is oscillating around the 40 mark, meaning that the asset is neither overbought nor oversold, leaving ample room for price movement in either direction without being immediately constrained by extreme conditions. Analyzing the volume profile, we see a slight decrease in trading volume during this consolidation, which is typical, but a strong breakout either above resistance or below support will likely be accompanied by a substantial volume spike, confirming the validity of the move. Should Bitcoin manage to convincingly break and sustain above the 92,500 USDT level, the next significant resistance would be found closer to the 93,500 USDT area, corresponding to a recent peak and a key Fibonacci retracement level from the previous uptrend. Conversely, a decisive break below the 90,000 USDT support could trigger a cascading sell-off targeting the 88,500 USDT level, which acted as a major area of accumulation in the previous move. The global macroeconomic sentiment remains mixed, with ongoing concerns about inflation and interest rate hikes from central banks, which continue to inject caution into risk on assets like Bitcoin. The narrative surrounding Bitcoin having anticipation is still a long-term bullish factor, but short-term price movements are more influenced by current market liquidity and derivative positions. USDT dominance in the stablecoin market reinforces its role as the primary trading pair for Bitcoin, which means its stability and continued trust are paramount for the overall health of the BTC USDT market. We must closely monitor the funding rates across major derivatives exchanges, as a flip to significantly negative rates could indicate an overleveraged short position, setting the stage for short squeeze event. This current period of tight range trading offers an opportunity for scalpers, but poses a higher risk for swing traders until a clear directional trend is established.